Let's talk about tax planning for Medicare premiums. So Medicare includes an income-related monthly adjustment amount, or IRMAA. This kicks in for high earners, and it's an additional monthly premium that you have to pay for Medicare Part B and for Part D. So today I want to talk about some strategies around how you can potentially reduce your liability. My name is Scott Caulfield. I'm a CPA and a CFA charter holder, and I'm the founder of Sophos Wealth Management. So first, let's kind of look at what the breakpoints are for these IRMAA. If you look at this table, this is going to show where it's going to be for 2024. You'll see if you're married filing jointly, anyone who makes $206,000 or less is going to be in the lowest premium amount. That's going to be $174.70 for 2024. And if you're any other filing status, it's going to be $103,000 or less. And then your Part D premium is just going to be whatever your plan premium is. So that's the level at which you'll have no IRMAA. And let's talk for a second about what those income amounts are. This is going to be based on your modified adjusted gross income. So that's going to be your adjusted gross income. That's like line 11 of a Form 1040. And you're going to add back tax-exempt interest income. You'll find that on line 2A of Form 1040. So think like muni bonds type stuff. Now, your premium adjustment, however, this income amount is based on your modified adjusted gross income 2 years prior. So for 2024, we're going to be looking at your 2022 income. So for 2024, if you do jump into the first premium bucket amount, that's going to be married filing jointly making more than $206,000. And for individuals, that's going to be making more than $103,000. That means that monthly premium for Part B goes from $174 up to $244, $244.60. So quite a jump. Annualized, you're getting close to $1,000. As you hit the next break point, you're coming up an additional $100 a month in that monthly premium. So this can kind of add up, and it definitely incentivizes taxpayers that are close to a break point to think about strategies of coming under so that they don't pay an additional monthly premium, or that their premium is at least in a lower bucketed amount. So what are some ways you could do this? If you think your income is going to put you close to a break point, you might want to look at strategies for reducing it a little bit that year. Fortunately, in retirement, we often have a few levers we can pull. First of all, we've got capital gains. So if you've got taxable accounts, you can look at positions that you're holding that are at a loss. You can try to sell some of your investments or stock that you've got where you're sitting underwater. This can help kind of reduce our taxable income there, or at least maybe not sell some of our winners. Wait until the next tax year. If you're pulling monthly amounts from retirement accounts, rather than take money out of a taxable IRA, outside of course, your RMD, you can take it out of a non-taxable Roth account or from a brokerage account, just a normal individual account. So by doing little things like this, hopefully you can kind of get your income under that break point. So let's say you're married filing jointly, you think your income might be in the 205, 210, 220 range. For 2023. So that would put you real close to that break point. Of course, we don't know what it's going to be for 2025, but if we think, okay, 2024 is currently at about 206, so maybe we guesstimate it'll be 210. If we're trying to get it under that, maybe you've got some stock, sitting at a $5,000, $10,000 loss. You could sell that, kind of sneak yourself under that, that bracket. And then, in years when you're going to be kind of more the middle of the range, then you don't really have to worry about it. You can maybe take some of those capital gains or other stuff. So, this is something that is always worth looking at to see if there's any opportunities here. Of course, I always caveat that by saying don't let the tax tail wag the investing dog. Of course, we always want to pay less taxes, but we don't want to do anything rash to try to achieve that. But hopefully this was helpful. I'm always happy to talk about your situation. I encourage you to check out my website to learn more, and feel free to like this video and subscribe to my channel. Thanks a lot.